The Mystery Shack is the site of countless scams, controversies, and questionable business practices. It takes the strange lore and supernatural oddities of Gravity Falls and turns them into profit for Stan Pines. But what would happen in a routine audit if the state of Oregon's auditors ever set their sights on the Mystery Shack? The first violation auditors look for is unreported income. This refers to revenue collected through business operations that never makes it onto the official books, which means no taxes are paid on it. Concealing these earnings is much more difficult when transactions are made through checks or cards, so the most common way someone in Stan's position would do this is by collecting cash. Whether or not Stan hides cash isn't much of a mystery. On separate occasions, Stan has revealed that he hides money in his sleeve. Once, in Dipper vs. Manliness.
What am I, made of money? Tap, tap.
Aww.
And another time in Karaoke.
What can I get you? Keychains? Snow globes? These rare photos of American presidents?
While this isn't necessarily something auditors would see, it tells us that if they started digging, they'd likely find some discrepancies between the number of goods sold and revenue reported. Of course, it's possible that stuffing money in his sleeve is just how he tips the dry cleaner, but given everything else we know, the safer bet is that it's part of his bookkeeping system. Looking closer at how Stan collects cash, we see that the shop's operations are perfect for off-the-books income. He sells items from the shop and charges to see attractions, both of which involve cash, not checks or cards. This gives him the distinct opportunity to get sloppy with record keeping and sneak money into his own pockets, or sleeves. If an auditor were to analyze the sources of revenue for the shack, they would have a difficult time, because all the ways Stan schemes to get money from customers are not crystal clear to an outsider. For example, in Double Dipper we see Stan announce a surprise charge for everyone at the party.
And if anyone wants to leave, I'm charging an exit fee of $15. We've only got 13. We're trapped!
If the people at the party didn't know until halfway through that they'd be paying to leave, think about how clueless an auditor would be about this random source of revenue. And that doesn't even touch on the randomness of traffic to the shack. Tourists from all over America stop by, buying tickets and spending cash on whatever Stan charges them for. To an auditor, that unpredictability makes it nearly impossible to match customer activity with reported sales. This kind of behavior is exactly why auditors give extra attention to cash-heavy businesses. Cards and checks naturally create a trail of documentation, but loose bills vanish the moment they change hands. If the owner decides not to deposit them, they might as well have never existed. And that's where the real problem lies. For wages, salaries, and dividends, the IRS usually receives a third-party report directly from employees or brokers. If you make $50,000 at a job, the IRS already has a W-2 or a 1099 with that exact number, which leaves little room for creative reporting. Business income, especially when it comes from customers handing over cash, operates differently. There's often no third-party verification. The only record is whatever the business owner chooses to write down. That makes it easier to skim or underreport income without anyone noticing. IRS research makes the issue clear. While wage income has a misreporting rate of only about 1%, business income is underreported by more than 50%. And that gap exists almost entirely because of the missing paper trail. If half of businesses underreport their income, it's not that much of a stretch to guess that the shack would fall squarely within that category. Another major red flag for auditors is how a business classifies its workers. Payroll is not just about cutting checks. It governs items such as Social Security contributions, unemployment insurance, and basic workplace protections. At the shack, the problem shows up in Stan's own words. In Tourist Trapped, he says the following:
I'd fire all of you if I could.
On the surface, it's just a grumpy comment, but to an auditor, that kind of language means something more. He talks like an employer, even though the people working for him aren't treated as formal employees. That distinction is critical. A contractor sets their own hours, brings their own tools, and gets paid for results. An employee works under the boss's control, the schedule, the duties, and even the threat of being fired. If you call someone a contractor, but treat them like staff, you've crossed the line. This gets especially murky with Dipper and Mabel. They run ticket booths, clean up, and handle tourists, all without pay. Stan frames it as family pitching in. Legally, children can help in a family business, but once the help starts looking like regular shifts with responsibilities, auditors get suspicious. To them, it looks like hidden payroll. No wages on the books, no taxes withheld, no contributions to Social Security. And unlike cash sales, payroll leaves a paper trail. W-2s, Social Security, Medicare, all of it gets automatically reported. If the records don't exist, but the work clearly does, that gap is hard to explain away. The issue isn't unique to one oddball gift shop. National studies estimate that 10 to 30% of US employers misclassify workers as contractors instead of employees. In construction alone, that misclassification covers over 1 million workers. It's one of the most widespread forms of payroll fraud, and auditors are trained to spot it. Auditors also look for signs that a business is being honest with customers and regulators. Fraud can take many forms: fake paperwork, forged signatures, or coercive sales tactics. These are signals to regulators that the owner is willing to misrepresent reality for money. And if they are comfortable bending the rules in one regard, it raises the question of what else they might be willing to fabricate in their books. In The Time Traveler's Pig, Stan hosts a carnival at the shack, and this problem comes into focus with Stan's approach to safety. Stan says the following:
I got a job for you two. I printed up a bunch of fake safety inspection certificates. Go slap one on anything that looks like a lawsuit.
Grunkle Stan, is that legal?
When there's no cops around, anything's legal.
In regulatory terms, this is misrepresentation, because in the real world, safety certifications come from third-party inspectors, not your own printer. Businesses that cut corners here face serious consequences. In Dipper vs. Manliness, the same issue applies to Stan's interaction with Tyler Cute Biker. When Tyler lingers too long choosing a t-shirt, Stan suggests the following:
I'm fine locking him inside if you are.
Legally, this is considered coercion. Consumer protection law explicitly prohibits tactics that restrict a customer's freedom to pressure a purchase. Regulators confront this constantly in the modern marketplace. Online, the FTC refers to them as dark patterns, designs that make it easy to subscribe but nearly impossible to cancel, or interfaces that trap users in loops until they pay. In 2022, the FTC sued Vonage for exactly this, accusing the company of trapping customers in an obstacle course when they attempted to cancel service. The scheme cost consumers millions of dollars. These parallels matter because auditors treat behavior as a signal. If an owner is willing to fake paperwork or pressure customers, they are more likely to cut corners elsewhere, including on revenue reporting. The final issue auditors watch for is concealment. A business that prepares for regulators the way they prepare for customers is a suspicious sign. Auditors don't just look at what's on the books, they look at how far an owner will go to keep things off the books. If the business is training staff to hide things, or openly planning for government inspections, it signals intent. A clear example of such intent is in Karaoke, when Seuss questions Stan here.
Hey, Mr. Pines, what's that code word I'm supposed to yell when I see a government vehicle? Wait, what? Government vehicle?
In real life, regulators take similar tactics seriously. In 2024, the PCAOB sanctioned New York firm Rains & Fisher after discovering its staff had modified audit papers after their completion dates to evade inspection. They altered timestamps, backdated entries, and concealed changes from inspection staff. The penalties were severe. The firm's registration was revoked, its partners were barred, and $465,000 in fines were imposed. And then comes the biggest tell of all. In Bottomless Pit, Mabel tells a story about what happened when she gave Stan the truth teeth to stop him from lying. While in his office, he does some paperwork, and Dipper finds a paper where Stan admits that he committed tax fraud. When questioned, he says this:
Because I regularly commit massive tax fraud.
This admission confirms that an audit of the shack would be the end of the shack. Tax fraud is a felony, and saying he does it massively means that he doesn't have a fighting chance against authorities scrounging his books. Together, these moments show why concealment matters. It isn't just about sloppy paperwork, it's about intent. When auditors see signs of evasion, from code words to outright admissions, they assume the worst. At the Mystery Shack, the problem isn't just what's missing from the records. It's the mindset that hiding, dodging, and lying are part of the business model. Audits that find wrongdoing end with more than just a warning. Regulators can collect back taxes, add on interest, and in worst cases, press criminal charges. For a business like the Shack, that's a real threat. The first penalty is financial. Unreported revenue doesn't just vanish. Auditors tack it back on the books, and the IRS adds penalties that can climb as high as 75% of the unpaid tax. For a cash-only operation, that kind of debt is enough to sink the whole enterprise. The second penalty is payroll. Skipping payroll taxes doesn't just cut expenses, it cheats workers out of Social Security credits, unemployment insurance, and minimum wage protections. If investigators dug in and found regular staff working on the books, whether it's teenagers behind the register or employees without proper benefits, the consequences would stack up fast. Regulators could demand back pay, force reclassification, and tack on violations ranging from wage theft to child labor. Between 2021 and 2023, the Department of Labor alone recovered more than $1.5 billion in stolen wages. The third penalty is legal. Simple mistakes keep a case in civil territory. Fraud, concealment, or falsifying records push it into criminal court. Filing false returns or coercing employees shows intent. And tax fraud is one of the government's favorite felonies to prosecute, carrying up to 5 years in prison and $250,000 in fines per count. In practice, small business owners who try stunts this blatant are likely to get referred for prosecution. For the shack, the likely outcome isn't a neat adjustment to the ledger. It's asset seizures, liens, back wages, and the possibility of staying behind bars. Numbers on the balance sheet are one thing. The ripple effects through people's lives are another. For the shack, the fallout wouldn't be subtle. The staff would be the first to feel it. Wendy and Seuss wouldn't just lose paychecks, they'd have to tell future employers that their last job ended with federal padlocks on the door. Tourists looking for authentic local wonders would find auction notices instead. And while locals might celebrate the end of the scams, the town would miss the steady flow of confused out-of-towners dropping cash on mystery trinkets. And then there's Dipper and Mabel. For them, summer's over early because Grunkle Stan can't get away with tax evasion. Their adventures don't end with a heartfelt goodbye. They end with a U-Haul pulling out of the driveway with mystery merchandise and strange taxidermy. For Stan, best case is probation and an ankle monitor. Worst case, prison. Either way, once the Fed sees the business, you're not getting it back. The fake relics, the real relics, and a few things that probably should have been in containment years ago all end up in government storage. And while Stan would surely be buried under an avalanche of legal troubles, let's be honest, this is Stan Pines. By the time the judge signs his arrest warrant, he'd already be halfway to Paraguay with a suitcase full of cash and a brand new identity. Thank you for watching. Please subscribe if you want to see more of this type of content, and I'll see you in the next video.